Okay.
trying to kind of force that TLM, thinking I saw it, not acceptance. Acceptance
Right.
hadn't hit very long, and
Right.
so yeah, I took it and it turned and went the other direction.
Did you make any trades this past week, or what you've been doing? What's kind of been your focus?
Honestly, I only took one trade this week. I think last week I recorded it on the 5th, but I didn't put it in the journal because I was at
Okay.
work, and so I did win.
Okay.
But before then, it was just a gang of losses, stream of losses.
Well, let's do this. I'm going to show you. I pulled up MES, and so to kind of show you, I mean, we'll look at this, and this is something I call back testing. This is, got
Mhm.
into what I'll do is we'll just kind of look at the screen together and look at where there might be some trade opportunities. And then one thing I want to share with you a little bit about that may help is kind of understanding kind of what I call session progression and
Mhm.
how that kind of sets up your bias. Like, let me ask, what's your trading window during the day?
I mean, I can get on the market as early as 8 o'clock. I have to be to work at 7:30. Pretty flexible.
Okay.
Because the students don't get in, So I'm there to
Okay.
9:30, 10:30. Between 9:30, 10:30, I can hang out from 8 to that time frame, just kind of doing some paperwork and stuff like that.
Okay. Guys, I was gonna say actually the London session, if you can get up early, like 5 to 8,
Hmm.
the London, and I'm gonna show you some examples of this here in a minute. The London tends to be more predictable. So let me share my screen with you. And I'm sure, and I'm sure you hear people talk about the market structure, continuation trade.
Yes, sir.
Okay, have you watched any of Hector's webinars on that?
I haven't. I know I've watched all the videos,
Okay,
from the mastery course.
right.
But I know I saw one of your Zooms. It came across one day on Slack, and so I said, "Well, let me click on this." Is about 2 weeks ago,
Okay,
and I don't know. It just kind of stuck with me for a second, and I said, "Well,
sure.
let me just give him a try." I kind of like the. I ain't gonna lie, I like the colors and everything. So.
Sure, no worry. Well, and nothing wrong with trying to learn from everybody. Engage in awesome futures coach. I was watching some of his stuff with he's solid on details. And so yeah, so you see my screen here. I'm on MES, which by the way, I'm sure you know MES can be one of the most challenging because it has the most. It can really be herky jerky,
Right.
But even then, you can still get some good trades out of it. So what I've done, I'm on like a 15-minute time frame. And let's just go back. So one of the things I want to talk about, this is, we'll look at this example here, is what I call market structure, or I should say session to session continuation. Ideally, it's best when you see a steady progression up or down from one session to the next. So notice here, London, basically, it broke the high from the Tokyo session, right? Kind of continue that trend going up. And you see here, when you see this nice, I mean, you can kind of see it going from when Tokyo had this bottom here, right? Came up, formed a high. Now, it didn't break this high until this
Right.
point here, right? And then it broke this high over here. But you see it kind of formed a new high, and then you got this trade opportunity right here. This was at 7 o'clock in the morning. And see how, I mean, of course, you can see it, it just accelerated in the New York session. What you got to watch for on the New York session, which is like that's why I would not trade like that 9 to 10 a.m. window. You got to be very careful. Let things kind of get settled down. From nine. So let me color that in purple here. From 9 to 10. Let's see. You're gonna get it right set up right here. Boom. Right like that. There you go. That nine. I guess that's
Hmm.
close enough. You can get some crazy stuff like particularly when it's an explosive move like this. It'll actually do that.
Yeah.
So that's why it's good to, I would say, let the market settle itself out, from that 9 to 10 o'clock. If you don't have a trade before nine, just kind of cool your jets, let the markets, because what will happen a lot of times is you will get, like I've seen this happen a lot where, let's say the market's doing this for the open, right?
Hmm.
And then it'll at 9 o'clock, it'll come here, do a false breakout, come down here, take out these lows, right? Then do the run, right?
Hmm.
And what you do with market structure continuation is once you get a clear low and a clear break, then you say, okay, now I've got my strong low.
Hmm.
right? Because it's the low that broke this consolidation, right? That happened before the market opened, right? There's a consolidation here. And then now I'm waiting for this high to get set, right? Once it sets this high, and then what you do is you use your fib, say, okay, now I got my low, it's clearly trending up. I'm going to wait. And this is where Hector uses like a 60% retracement to this point here. Now, because I've broken this high here. So I got a clear break of structure, right?
Right.
And this does not have to be a demand zone bound.
Okay.
What makes it significant is you had this consolidation, and then now there's all this volume post market open that's clearly created a new high. So that's all the confirmation you need. You know, trend is up, right?
Okay.
Likely at that point. And that's where this kind of thing helps too. Like, okay, did the London respect the Tokyo low, and did it extend it? Yes, right? It kind of went up. So the same thing here. If you see that London is respecting the Tokyo lows and is trending up, then unless the New York tells you something different, that's why you wait for that 9 to 10 a.m. window.
Okay.
In the morning, and if it confirms it, you play it to the upside. So what you would do in this case is using my risk reward tool. I'm waiting for it to come down, do this retrace. I got like a 1.5R trade.
Okay.
That's the reason we do that instead of the 50%, because the 50% is just a one, right? And you really
Right.
in futures you want 1.5 or higher. So
Okay.
that would be your trade right there. So there's some overlap between the two.
Overlap.
But what I do, just so you know, like how my personal, like I trade options and futures, I will look for a trade between like 5 and 8. And if it's not there, I won't take it.
Really?
Well, as you can see here, you got this trade here. I was going to show you another example. Let's see. Here's another example in the London. This is at 6 o'clock.
Mm-hmm.
See how you get sort of kind of this situation, kind of retrace, come back up, broke this low, right? Kind of this beginning of this market structure. Doing here, low high, broke this low, came back. That would have been your trade right there. You see how as you get into the New York, see how crazier it gets. But that, I would say generally though, when you see that strong a reversal like that, when you see it kind of start to, I would say it's like choose your environment. Do you want to trade an environment that's really showing this, right?
Mm-hmm.
Or do you want to trade an environment that's doing this?
Right.
And
No,
sometimes we're
sir.
saying, hey, you know what I'm saying? To
Right.
choose your game. If it's not a clear game to play, just don't play it.
Right.
And you can see when it's a regular thing, you can just see the highs and lows. So what I would do is say, just learn to read it, saying, okay, is there a regular continuity to what it wants to do?
Right.
And then play that game. If it's anything that looks like this all over the place or long wicks, just say, okay, it's not my day. Well, because otherwise you're giving your money away, right?
That's right. Done a lot of that.
Tavorris, to make sure back test it, right? So
Okay.
let's talk about what that means. Let's do this one. Okay, so let's go back. Okay, so let's say, all right, so this way you don't really see. This is what you actually see what's going on. So let's say, okay, we had this move. Okay, London opened up. Okay, got this nice up move here. I'm gonna set my demand zone here. And I'm keeping an eye on this pivot point. So what I'm looking at is an opportunity as a price to come in, tap the midpoint of that pivot right there, 15 minutes. And sometimes I'll also look at this point too, right here, if there's a strong reaction, the very next one. So as you can see, prices coming in. Okay. All right, coming down. I'm gonna say, okay, I'm gonna say, all right. And sometimes you can wait for the reaction. So you can say, okay, I'm gonna see a reaction. Okay, boom, see that reaction?
That's right.
I mean, that's what you want to see. You don't want to see it hanging around. You'll see it pop in and pop out.
Right.
Buy right there. Put my stop loss. You can either do this or down here if you wanted. Target point, say right here, firm.
Let's say on one of those wins that you just showed me a minute ago.
Yeah.
And you drew your fib.
Yes.
And it's a clear downtrend.
Yep.
And you drew your fib, and the price just blew right through that 60% mark.
Then you can wait. There's nothing wrong with waiting, right?
Mm-hmm.
You can. So there's a couple of decisions ways you can play that. You can wait. Now I'm gonna give you another one of my little secrets. Notice this is why I like 15 minutes. So let's say you've got a situation where I'm just gonna use this as an example. This may be better right here. Let's say let me find a better. I'm gonna give you an example. This might be a better one right here. Okay, yeah, this is good. So you notice we're in a kind of a steady uptrend, right?
Right.
Pay attention to these 15-minute candles that start the move of each run, right? Because what you'll get, let's see, it's like this is your best one right here, is you'll see retraces that give you a window to get in. See that right there?
Mm-hmm.
So, but the key is you've got kind of had one here too. Once you see it come up like that, and you particularly got a good 15, like I said, this good 15 pivot like that, you can set. You can see price never came down and tapped it. But a lot of times I'll
Right.
see price come in and tap it and go.
Hmm.
So what you want to see this steady pattern first. But if you see one and then you see a strong move up on it, you need to keep like set an alert or something because there's probably going to be an opportunity to get in at that pivot point.
Okay.
And you can kind of see it happen right here too on the New York session. See, I kind of came up and
Right.
boom.
Hmm.
So
So
that
is
could
that
be
considered supply and demand? That right there on the New York
it's what I call support and resistance. It's
support and resistance?
really
Okay.
it's what you're looking at is you're basically because trend is up,
Hmm.
you're just trying to catch a pullback to get in on the trend going up. So
Okay.
you are playing demand, like say the reaction was here, right? In fact, you
Hmm.
probably could have taken a trade here, possibly off of that demand. But if you miss it, a lot of
Hmm.
times you'll get a pullback at these little 15-minute up candles. Let's see if I can find another example. Here's one right here. See that right there?
Yes, sir.
See what I'm talking about?
Hmm.
Now, again, you want to be trade. You only do this with the trend, right? Not against the trend.
That's right.
But you will get pullback. See one right there. Boom, breakout, kept on going. Breakout, kept on going. But you see how you kind of trained your eye, you kind of work and think of how many of these experiences you can create for yourself.
Right.
That's what I call a closed book back test. Even though, let's say you missed the trade, what you want to be able to consistently anticipate is where the market wants to go. And if you keep reading this the right way, you're going to be in more successful trades, right?
Right, right. I like this
Any-
setup though. This helps me. I've seen it before. I put it on there before on my TradingView account, but I didn't
Okay,
really know how to read it. You know what I'm saying? But I would always take off Tokyo and London because I'm
gotcha.
just thinking totally New York session, and I would always delete those. And now that I'm seeing and hearing you speak how to use it, I'm like, my goodness, I just would have never saw that.
Because this is when it finally broke that Tokyo high, which is about 8 o'clock
That's
in the
right. That's
morning.
right.
Yeah.
Okay.
So yeah, so you can, I mean, so that gives you, I mean, again, and that gives, and you'll see, yeah, I mean, you'll see, again, see this example, see here's another example telling you about. See this right here? It's right on these 15 pivots, either right after the candle turnaround or but you can see how price came in and just boom. I'm sorry, excuse me. See that right there?
Mm-hmm.
I'll zoom in a little bit so you can see it. Now I took a couple candles, but you can see how that was respected, this little 15-minute port candle right here. So that's why I marked those up, because a lot of times when you get a clear pattern where there's a break of structure, price will come back in and will wick right out of it.
That's right.
Okay.
Okay.
Cool, man. Well, I hope that was helpful for you.
It was. I'm getting ready to set it up right now as soon as we get off,
Awesome,
man.
man.